Morning to the FOMC preview coming shortly up in a few hours from now. We'll have the Fed meeting and the interest rate decision. It is highly anticipated because of several factors that are playing into hand as the market is moving into the second quarter of the year. One of them being is that where is inflation headed? Another one of them being is how worried is the Fed about rising bond yields and what is happening with the SLR extension. I'm not going to get into detail about all of these things now. What I'm going to go into this video is just to get a mindset of where we are in terms of what we're looking at in the market, what we're expecting for the rest of the week to play out. It's Wednesday now. There's a lot of volatility happening tonight, and there will be absorption from the market going into Thursday and Friday. So there should be a couple of good trades developing as the rest of the week moves on. Now, base case is there won't be any new changes. Fed won't reveal anything new. There's going to stay the steady course and just re-emphasize what I've been already saying. They're not worried about inflation. Yields are higher because the economy is doing great, so far and so forth. But as it stands, I'm expecting, on the contrary, for EURUSD to find a leg higher during the meeting. So looking at the 1 hour chart on EURUSD, just to get a perspective of where we are. This is the Sunday Monday range. So you're already trading here on Wednesday. We kind of moved lower already. I'm going to highlight the London fixes as they tend to be key for these events. So that was a Monday fix. Currently we're trading underneath it. This is our Tuesday fix over here, which I will be very keen to observe during the meeting, see how market reacts in terms of to that fix. So what I'm expecting, my base case is that going into the meeting today, which will be about 7 o'clock London time, prices will move around here. They will stay above Monday's fix. We should get a bounce, and that will catapult the pair back up to 120. If things don't turn out quite as they are, so if the Fed starts talking about things that we weren't expecting, then there's obviously a risk of a full-on collapse underneath here, which I believe there will be so many more trading opportunities as the week develops. There is no need for front running this. By going into the event itself, it will be we're playing by the basis that we will see a jump because of the SLR extension about to come through, which is a USD negative. And that's one of the things I want to look at on the bigger perspective. So if you're looking out for another couple of weeks or possibly month, there's one or two trends emerging which I am more keen on building a narrative around. One of them is that yields are continuously moving higher across the globe, and while the central banks will try to hold it back, they won't be able to do much about it. And as that happens, CHF tends to go lower. That also means that Euro CHF could move higher. I've recently read an article from Danske Bank saying that it could be continuous push towards 1.5, which is nearly another 500 pips higher, up to 1.20, where in 2017-18 it found a ceiling. So we are currently in this range now. And when you have these macro things playing together, what you love to see, sort of a noisy box like here. So it's sort of a congestion. We kind of didn't see a new high since the beginning of March, and we have a sort of medium short-term bottom in the beginning of March. So we have this entire range here, which is comprised of about nearly 200 pips. Now, if we know that yields are moving higher, and we know Euro CHF will be moving higher with it, this is an ideal place to start adding long positions by trying to keep your position, your stop controls underneath your latest low, and in anticipation that prices never will be seen again, and we're going to see a continuous climb higher. Again, what you'd love to see is when you have a trend emerge, you'd like to see a sort of a noisy box like that where there's indecision. Reality, there is no indecision. We kind of know where things are headed, just prices stalling in the medium term to short term till it boxes out new positions. So ideally I like to be long in around these ranges as we're near on the bottom of the range. If we do fall lower, I would like to understand why. If there's just liquidity searches, reason to add. If it's a full return and the bond started rallying again and yields start dropping, then I like to get out of that position as the whole trade idea falls apart. But as the reflation trade is coming along, as the year is moving along, we are more likely to see yields climb, EuroCHF to push above this green zone, and we will have ourselves a good trend. Again, I like to be long around these areas, keeping my positioning, risk management below 190, 1940, somewhere around these areas, and that should keep us on the good side, and we'll be able to add on the position as we move along. Another trend that is emerging is GBP/AUD. Now these two central banks are diverging. I've outlined the yearly open in orange. The yearly open price tends to be significantly of importance for most of GBP pairs. So we've already seen it, we moved underneath, it came above, and then we don't need to touch and go. What is currently happening is that Australian Bank is extremely dovish. They are trying to keep the yields low as much as they can, and in order for them to do that, they need to keep buying bonds. So they're quite dovish. They're not seeing any move in their rates until for another 4 years, 3-4 years. On the other side, we've got the Bank of England. They are not so dovish, but they're not very hawkish either. They try to play it a bit more balanced. But if you really read into their messaging, they're a little bit more hawkish than all the other central banks, specifically if you plot them against the RBA. For that very reason, again, we have this sort of like a noise area here developing where we didn't see a new high since the late of February, and in the middle of late February we saw sort of a bottom. So that's sort of a wider ranges here we're playing off, and we continuously seeing higher lows, while the higher highs are not coming yet, but it's coming very soon as that central bank divergence is building, and we're hoping to see a breakout to see 182 and a much further above it. So again, that's one of those pairs where I'm thinking about legging in long by keeping the positioning with risk management lower, using my London fixes to navigate the trades a little bit more to be able to get a bit sharper entry. So I'm highlighting the London fixes in red here. We had London fix from Tuesday, and let me delete this London fix from last week. We had the London fixes here from Monday and Tuesday, which does offer a really good way of managing our risk by keeping it below here. We have the Bank of England meeting tomorrow, so it's going to cause a lot of volatility. Ideally, I like to trade GBP/AUD alongside when the meeting is due or after it, just to get better pricing, because I think we could see another dip into here and then start legging in the long side to play that central bank divergence going ahead. So we covered Euro-USD, where I'm anticipating going to Fed meeting. We've covered EuroCHF, the month-long trend about to emerge, and also a possible breakout out of these ranges and a new trend emerging on GBP/AUD. So having a proper trend reversal in terms of what happened from last few months and last year. It would be a big difference. So we had this huge swing down, and we're kind of carving out the bottom as the central bank divergence is emerging. I'm really looking for this to push higher and go back into higher levels as the weeks and months roll over in the remainder of this year. Well, good luck for FOMC this evening. If there's not a trade quite emerging as we would like it to, it's fine. We don't have to push a trade, but it's really more about understanding what the messaging was, where's the next trade. We want to be trading from a position of strength. We don't necessarily want to jump into trades where we're uncertain what's happening. So I wish you best of luck, and we'll be seeing you in the chat room.